Welcome back, friends, for another vital update from the world of EV stocks. Before we begin, we have noticed that most of our viewers are not yet subscribed to our channel. So we would request you to subscribe to us, so that you don't miss out our regular updates about NIO or Xpeng or Tesla. Now let's get started. Both the Chinese electric car makers NIO and Xpeng have come a long way from the shadows of Tesla just 1 year ago. As most of you would know, NIO is already on its path to deliver close to 100,000 cars in 2021, and that number might very well double to 200,000 for 2022. Xpeng doesn't get mentioned by the media just as much as NIO, but we believe they might well be on their way towards becoming another Chinese giant. Currently their delivery numbers are slightly behind NIO's, but it seems they are actually growing even faster than NIO. Xpeng and NIO both announced record delivery numbers for the month of June. However, Xpeng's numbers actually grew nearly 7 times compared to the same month 1 year ago. That is just an incredible amount of growth. We believe Xpeng's growth is mainly driven by the fact that they already had a sedan in the market, and that their cars are priced significantly lower than most of the competition. What places Xpeng additionally at a sweet spot is that they also have their own factory. This means they are more vertically integrated than NIO, and that might eventually give them an advantage in the future. Besides the existing sedan P7, Xpeng recently had announced their second sedan P5. Now the company just reported that P5 just got over 5,000 orders in 7 hours after opening for pre-sale. That shows the mad demand for Xpeng's cars in the Chinese market.
And, Brian, certainly there's been a lot of focus on the stock over the last, really 6 months or so. It's been a name that's been, caught up in a number of different trades. I'm curious, though, about the business, because you guys, along with a couple of your peers in the China EV market, reported some pretty positive data for the month of June in terms of sales trends. And I'm just curious, how that is shaping up as we get into July here, and we think back to, the trajectory you rode in the first half of the year, and how you're thinking about the second half.
Yeah, I think the performance of our business, as well as the overall EV sector in China, has been really strong. I think surprisingly strong. If you look at our monthly delivery, which we disclose every month, we've been probably more than doubling on an annual basis for the 10 or 11 straight months. So that's astonishing. And also we have reported in our quarterly earnings that our gross margin has been increasing every quarter for the past 9 quarters. So not only the volume is increasing, but profitability is strong. So I think we're really, having a strong momentum in China. And if you look at the industry, the EV penetration in China has gone from 5% about a year ago to 10% today. It's more than doubled for the industry. So I think there is a strong wind behind our backs. I think it will carry through in the second half, because I think the second half typically is the stronger sales season for auto. So we are very hopeful that second half will have a stronger growth. On top of it, actually, we will be introducing brand new models. One will be the facelift G3, which is our first model. Now we have a makeover in the mid-cycle. And then the fourth quarter will be bringing our third brand new model, P5, to the market. So with 2 new models and the existing growth, we're very confident we can deliver, stellar growth in the second half.
Always good to speak with you. Thanks for taking the time over here this morning. So take us through this. This is known as a dual primary listing. So that subjects the company to rules and oversight of both U.S. and Hong Kong regulators. Why subject the company to that type of scrutiny?
I think this is it.
Sure, yeah, thank you. Very glad to be here, Brian. Now, dual primary listing actually, has a number of benefits. One is that the company can be actually listed independently in Hong Kong, which means that it does not rely on a listing status in the US to trade in Hong Kong. Most of the secondary listing in Hong Kong actually relies on US listing. So a primary listing gives us the independent listing and trading ability. Secondly is that the primary listing in Hong Kong actually gives us the ability to be eligible for Stock Connect, which means that the China-based A-share investors can, through Stock Connect, buy our shares in Hong Kong, which will give us the access to the Chinese capital markets, which also allows some of our customers can be our shareholders, which is also always our objective. So those benefits outweighs the additional hurdles that we need to cross to be listed. But on the other hand, those hurdles also make our company stronger and more compliant because we now satisfy both the Hong Kong and US standards.
And Brian, it's Julie here. It's good to see you. So is this also a move to mitigate some of the potential current regulatory risk we are seeing come out of China? Are you, as an executive at a company that is based in China and listed in the US as well as Hong Kong, are you concerned that Chinese regulators are going to say, you're no longer allowed to do that and you can't list in the US anymore? How big a risk is that in your view?
Well, to be frank, our dual prime listing process, we weren't aware of these regulatory changes. So that wasn't really the factor that factored into our decision to come to Hong Kong. But, these changes which are introduced in the recent days or weeks are very new. So we're really, need to study it. But the good thing is that we're already listed in US and now we're listed in Hong Kong. So we actually have a very solid footing as a, dual listed company in global markets. So I think we're very confident that we can actually provide stable access for our development to the capital markets.
We believe it is truly incredible what both NIO as well as Xpeng have achieved from where they were just 1 year ago. Both the brands are winning new customers in China this year who are now more confident on their local Chinese brands over even Tesla. While we see both the stocks having a massive room for growth ahead of them, looking into the second half of 2021, on valuation, Xpeng looks cheaper and they might well in the end reach $100 mark a little before NIO. Let us know in the comments what you guys think.
Since you and I last spoke, Tesla has really come under a lot more scrutiny in China regarding quality problems and how it sells its vehicles. Do you think Xpeng and even some of your competitors are gaining market share because of these stumbles?
Well, I think Tesla is still very strong in China. If you look at their delivery numbers in last month, they came back very strongly. It has a tremendous brand in local market. Its products still viewed as a high technology, one of the potential leaders in a number of areas. And also, I think that they are being very aggressive with pricing. So I think Tesla is still going to be a very strong competitors, and I think that they have a very commanding market share. Probably not as high as last year when they have a very dominating share. But on the other hand, I think the Chinese players are catching up very quickly. Our product and as well as some of the other products that are being introduced by the leading players have very good and comparable specs, as well as better user, features compared to Tesla. And I think we're catching up very quickly. So you can see that in the last few months, our growth has outpaced the industry as well as Tesla in China. But I think it's a long race because I think ultimately this market will not be dominated by one or two companies. It will probably be a number of players occupying probably large market share positions, for example, 10% and above. So that will probably likely to be the trend. And we hope to be one of those top players.